is that the creator or creators, we don't really know if it was a person or a group, but Satoshi Nakamoto, it was interesting because they released a white paper pretty much showing how to do it before they launched it themselves. And so rather than kind of keep all their secrets to themselves and then launch it, they released the white paper. They got criticism on it. They kind of had some interaction with other experts in the field, almost like a thesis defense in a way. And then they went ahead and launched the software, and then they gave themselves no pre-mine, so they didn't give themselves coins and then launch it. They had to continue to mine it just like anyone else on the network, so they had really no inherent advantage. And that kind of contrasts to a lot of the ways that later tokens launch themselves. A lot of them use pre-mines to their founders and their initial investors, whereas Bitcoin was launched more like a protocol rather than more like an investment. And so,
right.
By most metrics, the narrow definition doesn't really apply. And then the broader sense is just the idea that, really any non-cash flow producing asset is only worth what you think someone else is going to pay you for it in the future. And that's true for Bitcoin, that's true for gold, that's true for, fine art, beachfront property that you don't plan to rent out. All these kind of high-end kind of scarce goods, they're always based on, their scarcity and their desirability. And so it kind of goes through and just compares Bitcoin to some of those other things. And one thing that they all have in common is that they have some degree of utility, right? So, fine art has utility, a classic car has utility, beachfront property has utility, gold has utility, but they also have a monetary premium associated with them. And so they're bought for, more than just their utility. And Bitcoin's kind of a similar way because for its utility, you have, permissionless international payments that pretty much can't be stopped and easy mobility of funds, right? So you can just remember a 12-word seed phrase and go anywhere in the world, across borders, and basically transfer wealth wherever you want. That's its utility. Is that Bitcoin still has a variety of risks. It's going through an adoption period, and we'll see how far it gets. But it doesn't really meet the definition of a Ponzi scheme more so than any other kind of non-cash flow producing monetary asset.
I think the word Ponzi scheme may also be used loosely to describe something that is not inherently trading at fair value or is difficult to value in the first place. You mentioned assets that don't generate any free cash flow. Well, Bitcoin is one of them. You mentioned art, for example. Well, if I go to an auction and buy a famous painting for $1 million, well, who's to say that I overpaid or underpaid? How can you value something like that?
Well, that's actually one of the most challenging things with a non-cash flow producing asset. And so the same is true for gold. And so, for example, with gold, what I do is, because it has a long history, I compare it to the broad money supply growth, based on the premise that, the amount of gold per person doesn't really change much over time. It's mined actually almost at the exact rate of population growth, ironically. And so there's about 1 ounce of gold in the world per person, which is estimated. And so as the amount of fiat currency multiplies, you'd expect gold to roughly keep pace with that. Of course, it would undershoot it and overshoot it, undershoot it as sentiment changes, but roughly it keeps up with that. And that's what we see in history. A similar thing, beachfront property, you have these periods where it goes up very rapidly, but then if it gets overvalued, it kind of goes out of favor. And so with those things, it's quite challenging to value them because they don't have cash flows. You have to kind of estimate their attractiveness compared to other non-cash flow producing assets, and you can do things like compare the size of those markets compared to the expansion of the fiat money supply. And with Bitcoin, it really comes down to estimating how large it'll be when it's kind of finished this adoption curve. Like, some people say it'll be half as big as gold's market capitalization. Some people say it'll be as big or bigger. And, either way, it just comes down to estimating how big it will be. And then from there, you'd expect it to roughly grow at the rate of broad money supply increase.
Going back to gold and Bitcoin as assets that don't generate cash flow. All right. Well, would you agree with the notion that in that case, the market is always right in determining the price? If gold is trading at 1835 today, let's say, then that's because the market has bid for that price and deemed that to be the fair value at any given moment. Likewise, if Bitcoin is trading at $40,000 a coin, that should be the fair value because the market at that point has indicated that should be what it's trading at, or what it should be trading at. How would you respond to that?
I think there's some truth to that, but of course we can always go back in history and find where, in the short term, the market can be silly. And there's that quote from long ago where, in the short term, the market's a voting machine, but in the long term, it's a weighing machine. And so the market is more prone to, having errors in the short term. Like, for example, if you look at the dot-com bubble, there were companies trading at absolutely extraordinary valuations. Rather than just the Cisco's of the world, there were some like smaller companies that were trading at absolutely silly valuations, and we're seeing some of that today actually. And so you can have these periods of time where something trades at an irrational valuation because there's so many people that want to get into it, or you can have the opposite where no one wants to touch it and it's kind of like toxic and it's super cheap.
Right.
But over the fullness of time, I think the market kind of weighs things. And so we've seen for 12 years now how Bitcoin has changed in price by the market, especially compared to some of the other tokens. And same for gold. I think gold, I consider it fairly valued at this time. I think it's doing what we'd expect it to, even though I expect in the years ahead, I think it'll do pretty well. Well, Bitcoin is certainly one of the more volatile assets out there. And so that's really true for any kind of monetary asset. And so we've built up fine art prices to very high levels. And we could see, next year that a lot fewer people want to buy that fine art. And suddenly, they all kind of, millions of them come to the realization that they should pay a third as much. And so, that's one thing to monitor. Same thing, there are $40 million beachfront homes, throughout Florida, and you could find out that, maybe, next year they all want to pay 10 million for those. And it's, it's certainly possible, but there are a lot of on-chain indicators you can use. And so, for example, we can see what long-term holders are doing with Bitcoin. And we see that as the price goes up much, much higher, they're slowly willing to sell, some of their tokens because they've gone up 5x or 10x in some cases. But you don't see a lot of kind of movement from those long-term holders. A lot of those intermediate term, kind of like the near-term kind of price volatility, a lot of that has to do with the trading activity that we see on exchanges, whereas the long-term holding is actually kind of a steady thing to watch, similar to accumulating other types of property.
Okay. And final note on Bitcoin, you were bullish last time we spoke a few months ago. Are you still bullish now?
Yes, but I mean it's tempered somewhat by how well it's done. And so, for example, last time I was in your program was mid-December, and I said if it breaks over 20,000, then the bull market's back on, and I expected it to. I'm watching the $20,000 level very closely because until it breaks over there, it's at risk of further corrections and consolidations. But once it punches over 20,000 firmly into new all-time highs, the ceiling above that where it can go is rather high. And now since then it's more than doubled, and so I see a similar situation now where the resistance number is somewhere around 50,000 because that's a psychologically important number. It's a round number. You can look at there's sell orders in at that level, and my base case is that I think it will continue the bull market in 2021. But the higher you go, the less asymmetric that trade gets, with any kind of 12 to 18 month view compared to how it was last year.
And would you consider investing in any of the other altcoins that maybe have smaller market caps but also upside potential?
So personally, no, but I can see why people do it because during the bull runs, a lot of those alt tokens tend to even outperform Bitcoin in many cases in terms of percent gains. The problem that you run into is on the down leg of the cycle. Bitcoin's volatile enough, but some of those altcoins fall even farther. And then unlike Bitcoin that, it goes through this 4-year halving cycle, keeps making new highs every cycle. A lot of those other altcoins, after they have their blow off top, they never recover in later cycles. And so, really the two big ones are Bitcoin and Ethereum. But as you start venturing down to some of those other tokens, that gets increasingly risky and people should be aware of the risk they're taking on.